Welcome to Policy Bazaar. I'm Arjun Bhagat. Now, marriage is a lifelong partnership, and like any other partnership, it brings with it an altogether new set of expectations, responsibilities, and priorities. Now, buying life insurance is one such key responsibility. A regular question when couples take out life insurance is whether the insurance that has to be taken out should be single or joint life basis. To help answer these and understand the concept of joint life insurance, which incidentally is a great policy for couples to have, but is not widely known, we have with us Yashish Dahiya, CEO and founder of Policy Bazaar. Welcome to the show, Yashish. Now tell me, define for us what joint policies are, and how are they different from the individual policies that we have?
So when an individual has an individual policy, they have themselves covered and they have one or more nominees. In case an unfortunate event happens and that individual expires or one of the other incidents happens, then their nominees receive that amount of money. In a joint life policy, what happens is there are two people who are insured. So it could be a husband and wife. And suppose they've taken out a 50 lakh rupee joint life policy. And let's say it is a first death policy. So what that would imply is whenever any one of them expire or have a critical illness or whatever riders they may be or a disability, automatically the other one gets the funds according to the insurance policy. Now, that is precisely how it works. That's how a joint life policy works. It can be for as long as one requires. These can also be linked to retirement plans, etc. So that's that's what a joint life policy would be.
So let's go into the advantages of it.
Okay.
Specific advantages of a joint life policy, and also why isn't it really that popular? Because one has heard of it, but it's not really widely taken right now in India, at least.
Well, life insurance itself was not very widely taken and is still not very widely taken. So life insurance, as I know it,
in terms of the percentages,
in terms of the growth in life insurance, is a 3-4 year old phenomena. So of course, some of the variants of life insurance will only start coming in. Now the advantages. Imagine if there were two individuals, a couple, and they were to take out a plan for each one, right? That'll be the cost of two plans. Now, taking a single plan for both of them is going to be a lot cheaper. In case one of them expires or has a critical illness or has a disability, the other one gets the advantage. But that's going to be a lot cheaper. The second point is maybe only one of them has a regular income. So in that case, it would be very difficult for the second one to get a policy in the first place. However, a joint policy covers both, because a working partner will obviously have an impact when their job goes away, or because the income goes away because they are no longer there, or they're disabled, or they have a critical illness. However, if the spouse has a critical illness or a disability, one has to remember the spouse is also taking care of some responsibilities, and that will also have an almost equally devastating impact on the family. And hence a joint life policy takes care of that particular risk. So the basic advantage is one of cost, one of the fact that the impact, which is usually not measured in economic terms, is going to be there, and hence the benefit out of that. So the non-working spouse can get a cover. Third thing is these policies are usually quite easily renewable. Because there is a lower chance of risk or misdeclaration in these policies. Right. So they are more easily renewable, and that's the third advantage.
So would you actually recommend these policies? Would you recommend?
I think I certainly
And also,
would.
Which are some of the companies which are offering it? Because not everybody is actually offering a joint insurance policy right now.
Yes. So Max Life has one, LIC has one. There are a few others that have them.
Bajaj, is the procedure
has one.
different? Is it?
The procedure is not very different. The procedure is very similar. If a medical is required, both may need to undergo the medical. That's fairly common. The amount of cover one may get might be slightly lower, because remember, one of the non-working spouses may be getting covered. So both spouses are working, then obviously the issues are lower. The opportunity is also, suppose the spouse has you have a house, somebody has a house, and that can now be held in a joint name. Right. Many people like to keep their house and property in joint names. So that way it works, because the life cover essentially provides for it. So there are many reasons why one could take out a particular cover of this sort. And but the primary reason is to make sure that in case a devastating event happens, then the other party gets the benefit, and it could happen to either one of them. And the cost of such a cover is lower than two individual covers for both the both the parties.
So now we've heard of this term, writing a policy in trust. I mean, can you elaborate it? And then how do joint insurance policies actually fit into that kind of a mold?
Sure. So basically, you can write a policy into trust. What that implies is it's like a will, right? So there's inheritance that happens whenever somebody expires, and that inheritance has to follow a certain law, and there is a certain procedure that follows. In case you want a particular property, and life insurance policies are like a property, not to follow that process, and you want it specifically to go to the nominee, that is when you write a policy in trust. Which is what you can do in a joint life policy, because the moment you write it in trust, then the other party would get the benefit. Of course, there is a situation where, in the really unfortunate situation where both expire together, which could be an accident, etc. In that case, they do have to have a third nominee in case the policy is going to survive that.
Right. And what are some of the do's and don'ts of taking a joint insurance policy? I mean, people do separate. Marriages don't. All marriages don't last forever. Tell us a little bit about that, because that is a concern that a lot of people may have in taking a joint insurance policy.
Yeah, I would hope when people are getting married, they're not too concerned about getting separated. But yeah, that is.
It's good to know. It
is of course good to know. So there are two situations, because it can create complications. Specifically abroad, I come across couples who've separated and now they're both married to different individuals, and it'll be quite weird for them to have a joint life policy then, because from the death of one, the other one can benefit. So that's going to create quite a situation. In that, you have the option of either continuing the policy, or alternatively, stop payments. If you stop payments, you no longer continue that policy, because that's the best part about a life insurance policy. Any pure life insurance policy, you can stop anytime with no negative implication whatsoever. So the policy would not continue. Of course, if you've written it in trust, then whether the individual who has moved on from the marriage and moved on to another marriage, in case they do expire and they have a nominee or they have a legal heir, still the funds would come to the original person if it's written in trust. So there are ways to manage it. However, one important thing, this does not have to be taken only for married couples. This can even be taken for...
Yeah, so that's important.
It can be taken for anybody who has an interest in the other individual's life. So it could be two business partners. They may have a property together. And if they have a property together, it may have a loan on that. There may be a loan on that property, or there may be a loan on the business. And the loan on the business needs to be repaid. If one of them expires, it impacts the other one's ability to repay that loan.
Right.
And hence, they could have a joint life cover for the period of that loan. So any kind of home loan, any kind of business loan, anything can have a joint life policy. And these can also be specifically requested. So you could go to an insurance company and ask them to specifically create a product of this sort for you from a corporate perspective.
And is that a given? Does it really happen a lot as far as
it doesn't happen very often, but there is a provision for it. And should one seek to get these policies, they can. But that is more a question of awareness. Most people are not aware that, especially when you have business partners, we have things like key man insurance, etc.
Right,
but if the business is carrying loans on it, and suppose you are personally responsible for repaying those loans, then it may make sense in business partnerships to have these kind of policies. Property partnerships, business partnerships, all of those may require...
So you talked about the advantages of joint insurance policies. You talked about affordability. Also, tell us about the tax implications. And, does it just the person who actually buys it, who's the... the first policy holder gets the tax break? I mean, how does that work?
So whoever is paying for it would get the tax break up to the tax break limits prescribed, and you could actually have two people contributing into it. So you could both be paying up to the 1 lakh rupees of ADC, and you would both get the benefit of it. So that is not a complication. When the money is received, it is always tax free.
Right. Insurance is usually.
So it could be 50 lakhs, 1 crore rupees. The tax would not be deducted like happens in a lottery. Out here, the money would be paid entirely, and there'll be no taxes on it at that stage.
Right, Yashish. Now tell us a little bit about other joint insurance plans. Do we have others apart from just the life insurance for couples and for...
Of course. So, of course, life cover is one. You, of course, have the health plans where you can take it as a floater.
Right.
You can also have pension plans which can have joint survivor. So, typically...
So is that a new innovation, or it's been around for some time?
It's been around, but, these are products which have been around, people have forgotten about them, and they're coming back into the mainstream. See, people are really worried about their spouse when they are, going through life, especially the retirement stages. Because increasingly, we're not living in joint families. And the two individuals, after 60, they sort of depend on each other. And to an extent, if only one of them has a pension and the other one doesn't have a pension, that's slightly unfair, to say the least. And
right.
of course, it has many social implications and economic implications in that situation. So a plan that puts both on an equal footing, whereas, see, everybody has to expire one day,
right.
But whichever one does, the other person keeps getting the benefit for the period of life. Such are joint retirement plans, and as we spoke, so till retirement, you have joint term plans,
right.
You have joint health plans, which are fairly common. I think that's a fairly common platform called the floater platform, and
right.
But that we actually advise to separate it out.
So you've been saying that
because
have individual
health is a survival plan.
Right.
Say death plan is when the other individual doesn't survive. When you're surviving, then it's fine. You're taking on your own costs. So individual plans are better in health. So health, we do not advise you putting into single plans, but term covers, having a joint plan is sensible, and in a pension plan, having a joint plan is a definite. I wouldn't even say it's a preferred option, because if you're taking a plan only for one individual, that's pretty sad, because the other individual is going to be left in a difficult position,
right.
And that's not fair.
We've got Lal Singh, who's written to us from Bihar, and he's written about the IFCO Tokyo General Insurance Company. His policy that he's taken is the Swasthya Kavach, and his premium is 4,121. And he basically wants to know, it's an online policy, and he wants to know whether it's a good policy for him, Yashish, or should he switch to a different one?
He's obviously been through the process of purchasing the policy. He's been through the process online, so he's been through a lot of checks and balances. He's bought a pretty good plan. It's for 4,000 rupees. He's got a 2 lakh rupee cover. He's also got a critical illness cover. So it's got both a sum assured of 2 lakhs and it's got a critical illness benefit on top of that of 2 lakh rupees. And it's a good, robust policy. I think he should stay with it. He's obviously done his due diligence, and he should be confident about his decision and carry on with it.
So with that advice, we've got Rahul Mishra from Delhi. He says, I have a Mediclaim family insurance policy from my company, and for this the company has debited 15,000 rupees and issued a cashless card, and it's valid. It's valid, but he says, I've given in my resignation to the company, and now I want to take my wife. He wants a medical treatment for his wife, and so basically he's talking about the validity of that card.
Yeah, the card is not valid any longer, because from whatever I can understand of this policy, it's a corporate policy. So
even if he's paid for a specific period of time and that time is
the corporate
valid.
Policy is linked. See, the payment is a deduction that the company has made from his salary.
Right.
But that payment has not gone specifically to the insurance company. The insurance company has got a clubbed payment from his company. So, suppose there are 1,000 employees in his company. Everybody may have deducted 15,000 rupees, and it might become, 1.5 crore rupees. But when the insurance company has been paid, it has been paid 1.5 crore rupees for a group policy. Now, part of that group definition is employees of the company. If somebody is not an employee of that company on that particular date, they cannot. So the moment they have left the company, and resignation is not the time when you've left a company, it is when your resignation is accepted and the last date till which you are working.
Right.
But if the last date has passed, then whether you have the card or not, it's worthless. The card is only worthwhile while you are in the company, right, because you have to be part of that group, and the company has to certify you're part of that group. Only then will you get the benefit. To get the benefit. Otherwise, you would not get the benefit. That's the problem with all group policies. You only have them to
and that's why you've often recommended you should have an individual policy as well.
Health policy, it's a must to have an individual policy because of two specific reasons. First of all, you are part of a group till you are part of the group. One day you're going to retire. If health policy, it's a ticking, I wouldn't call it a time bomb, but our bodies.
You need it sometime or another, basically.
No, the problem is as we get older, we all know it. As people get older, the chances of them falling sick are higher, and the older you are, the chances of pre-existing disease coming in are higher, and that implies you may not get the right cover. And we have so many queries coming in. I'm I have this disease, I'm not getting a cover, help me. Why don't I get a cover? I've already had this disease. The cover has to be taken before you get the disease. After you get the disease, nobody's going to give you the cover. Whatever they say, it's going to become a very limited cover.
Right.
So please take it as early as possible.
Right, we've got Abhishek Dasgupta from Assam. He says that I have a ULIP that I bought in 2007. I've been paying a monthly premium of 5,000 a month.
Wow.
That's about 60,000 a year from Bharti AXA. I was not told all the details, he says, about this plan, and as of today, I'm not willing to continue this. Will this decision be good? If not, what should I do?
So the way most...
And he's paid a significant amount. I mean, if you look at...
This is an old time ULIP. I believe in the first 2-3 years of this ULIP. So this is before September 2010.
Right.
September 2010 was a watershed mark in terms of ULIPs. ULIPs became from pretty bad products to pretty good products on that day. So any product bought before that, you would have had very, very significant charges in the first 2-3 years. However, your charges are done. Whatever had to happen has happened. Now is the time when you will be having almost no charges. There may be some loyalty bonuses coming in. So there is nobody who's going to lose more than yourself if you cancel this policy at this stage. My point is, stay with this policy. Do not take on any surrender charges. If you don't have a financial necessity to kind of close the policy, stay with this policy. The second best option for you would be to convert it into a paid-up policy. If you can convert it into a paid-up policy, that would mean you would get proportional benefits compared to what you would have got, but that would still be worth it. Cancelling should be the last option and only done if you are in financial dire need to have that cash out. Otherwise, please continue with the policy.
Right, we've got Ravinder Behel from Amritsar. He says, I took a heartbeat gold policy of Max Bupa for me and my wife. My doubts are, he has a number of doubts. He says, is this the right policy for me? Is it value for money? And he's also concerned that it's a foreign company. Are there any risks associated with that? And which is a good Indian or foreign company? Now, he hasn't really given us the amount that he's spending on, but I mean,
Max Bupa is a fantastic company. It's doing very well. Bupa is one of the largest health groups in the world. It's a UK-based group. Max Hospitals, I think many people who've kind of would know about Max Hospitals. So I think it's a joint collaboration between the two. IRDA necessitates everybody to have a significant amount of corpus to pay out funds, etc. So I don't think consumers need to be worried about will this company survive, will this company not survive. That is not your concern, that is the regulator's concern, and the regulator's taken care of it quite well. As far as the particular policy is concerned, Heartbeat Gold, it allows you to start having basically maternity benefits from the second year itself. It's a fairly strong, robust policy, much better than many of the others. It does give you, as I said, some of the benefits far quicker. The pre-existing, etc. is far quicker than many of the other plans. And Max Bupa has a very good record for claim settlement and claims processing. So I think you've got a great plan. Please don't get confused and stay with it.
Right, Yashish, that's all the time that we have on Policy Bazaar. But you can write your queries at ask.policybazaar.com. You can tweet us at policybazaar_in. And we'll see you next time. Goodbye.